Kathleen, good to have you back.
Thanks, Carol.
What do you make? Let's start with Europe in terms of what's going on over there.
Sure. Well, it's not a surprise. This is something that we've been expecting for some time.
So priced in?
No, I would not say it's necessarily priced in. There's still a lot of risk here. I think it's a long-term opportunity, but it's finding the right entry point. It's also trying to find the flows as well. We're competing against other buyers, so it can be a challenging market.
You know, we were talking about this yesterday, that it's not a surprise. Everybody was waiting for the announcement, right, or the vote. But if you look at the worst case scenario, I mean, is it another domino? Is Spain the next to go? I mean, is that the worry?
Yes, they're all falling, and it seems that until they really realize that access to capital is going to be cut off, they're going to continue to kick the can down the road. So that's why it's so important to recognize the risks of a restructuring, but recognize long-term these are very productive economies.
But you say opportunity. I mean, if this is an opportunity for you, then access to capital isn't going to be cut off, right?
There can be short-term twists and turns here. And I think in order to get the Nancy Pelosi moment, so to speak, in Europe, you really have to have their backs against the wall, and we're not there yet. But when there's volatility and uncertainty, it can create buying opportunities.
Now, back in December, you were saying European bonds have long-term opportunity. You kind of said it again here. So tell me kind of what's your strategy as you're kind of dealing with the highs and lows of the stuff coming out of Europe?
When there's uncertainty, when there are lows, and you're compensated for the long-term risk, you step in and buy.
So have you been buying in the last week or two, or what?
We see value, and we're very price conscious.
Okay.
Where is it? Where do you see value? In Portugal? I mean,
in where we have exposure now is Greece, Ireland, and Portugal. I think there are also select opportunities in some of the corporate bonds without taking the currency exposure.
What about Spain right now, which is everybody wondering what's next here?
Right. Levels that I've seen so far have not been entertaining from a sovereign level. Again, watching both the government and the corporate market for those opportunities.
Here we're looking at a chart, yield on Spanish 10-year debt. I mean, does this line shoot up in the next couple of weeks, couple of months?
It should if there's real uncertainty. I would say that that's a level where I wouldn't want to get involved, but I would want to look for opportunities. Corporate bonds, you have an additional yield there, so you're compensated for some risk.
So you like corporates better than the government debt in general, the sovereign debt in general over there?
All depends on the yield and the price. I think there are opportunities in both.
So how much are you moving in and out of these markets right now?
The flow is very thin, so it's difficult to trade in any type of size.
Something that caught our attention, and this is about the Fed getting ready to start selling, what, $10 billion worth of mortgage-backed securities, I think a month, I think it is.
That's right.
I mean, are there opportunities there for you guys?
It's a great market right now because we've got liquidity out there from the central banks. We've seen spreads narrow, so it means you really have to fight harder in terms of item selection and look in different markets. The securitized market, for that reason, does offer some good value.
So you'd be buying maybe?
In certain areas, definitely. But you really have to focus on, in the securitized market, the particular underlying tranches, really know the deals, and even in corporates.
Well, that's a great question. Do we really know what's in those tranches? I mean, this was what got us all into trouble going back to the crisis.
Sophisticated investors can get the data. It's expensive to do the research, so you really have to look at an institutional level for people who know those markets.
But this is a market that dried up. Obviously, volume in a lot of different asset classes has been really anemic still lately. Is it coming back here? Is this market waking back up, you think? Is that what this says?
It's definitely waking back up, and it has been for a while. With rates so low and liquidity out there, it's more of a risk-on market. The volatility with the negative headlines from a global political perspective are creating some uncertainty, but clearly a lot of liquidity and a grab for yield. So that's why it's so important to focus on the item selection, because the market isn't really being that selective.
It's a tough job. I mean, you need a big institutional partner to help you do this.
Absolutely.
And it's worth the time and money and the research to do it because of the opportunities here, or no?
Yes, very much so.
What about other opportunities, Kathleen? I think we've got 45 seconds left here. What else are you finding interesting in terms of the fixed income market?
Well, we like yield. We like corporates. High yield spreads have narrowed a lot, which makes it a little bit more challenging. So we're avoiding low quality triple Cs, but take risk, equity-like securities convert seem attractive.
And you like Intel and Ford, right? In terms
That's
of the
right.
corporate debt markets.
That's correct.
But you're saying basically, like the equity market, the low-hanging fruit is kind of gone now.
Yes, it has.
All right, Kathleen, thanks so much for joining us.